So, platinum subscribers, all right. I was going to say you're very important to me, and although I don't produce a lot of content at the moment, there's a big reason for it. Predominantly, it's not really a great time to buy. There's not a lot of what I want to be doing. This is what I want you guys to get out of this, ladies and gents, is building a portfolio of stocks, making money, and expanding that, but also providing you context on the current market conditions. And I'm going to do that now. So this is a kind of a update video and a couple of thoughts that I have on the market, some concerns that I have, and where we are. But remember that every kind of tough period is also a potential buying opportunity. Okay, so the first thing I want to talk about here is Warren Buffett's retiring. He's finishing on a high. It's a very clever way to go. And so he's out. The next thing that I want to mention about this is that Berkshire Hathaway has just one of the largest, if not the single largest, cash holding at the moment. In other words, they're just waiting for the market to have a correction before they throw their money back into the market. The only other thing he said here is that he has expressed concern about the potential economic impact of tariffs and trade barriers, warning that trade shouldn't be used as a weapon and such policies could have recessionary effects. So keeping it really simple, in theory, as long as trade tariffs are used this way, the danger of a recession, which could even be a global recession, we hope not, could potentially be the case. And again, also here, I'm similar in terms of that, in terms of value investing as well, but very much influenced by Ray Dalio, Warren Buffett, as you know, or may not know. And so for me, I am anticipating a bit more of a further market correction. So a couple of things are very much, so my expectation, one of the things I'm watching at the moment is to see whether the dollar ultimately weakens. So if I have a look here at the dollar index, I'm looking to see if this level holds. If we break below the $100 level, which is a psychological, very much a round number as well, my expectation is we would head down towards $90, and that would have relatively large impacts on the bond markets as well, because in terms of yields against the dollar. So there would be some impact there. Next up, if we have a quick look at the global indices, although we are seeing a bit of a bounce, and so let's have a look at it from a bigger picture perspective, all of this so far looks good. Here is my only concern from an experience point of view. The tariffs haven't been reduced, they haven't gone away. If anything, they're only starting to roll out now. We're going to see the impact of fewer ships arriving with cargo in US ports, which will translate into fewer dock workers and fewer people obviously working on the docks, as well as ultimately leading to fewer deliveries by trucks to stores and ultimately to empty shelves. We're just at the beginning of the early stages of that. So that's actually going to be May where we're going to start to see the impact of that. And that could then have an impact on the sentiment. There are more tariffs coming into more areas, and there's more, I would say that the sense of fear and uncertainty has still the potential to keep increasing. And so for me, from that perspective, from experience speaking, I'm not convinced that we're free and clear yet. We need to get some sense of stability for the market to be able to make some sense of what's going on. From a technical perspective, I can see that we have bounced. We've got this almost knee-jerk reaction off the 50-period moving average. And for me, that's usually a point where I would look to be buying stuff. Okay, so from a technical perspective, absolutely, there are some early signs of buying. Now, here's my concern. My concern is taking what I've spoken to you about with regards to Warren Buffett being cash rich, him not feeling ready to buy into the market. That tells me that they are anticipating a bigger correction here, a much bigger correction. And I have to say, from experience, considering the fact that none of the news has got any better, it should only get worse, I can't really see how the market has managed to rebound from a fundamental perspective. But from a technical reason, absolutely. There are always orders sitting below these lower levels. So if the market drops, these are buy orders. There is always a lot of people with spare cash saying, look, as soon as that market drops, I want you to buy for me because then I can pick stuff up at a discount. So for me, an easy technical explanation is that the market has come down, triggered a lot of buy orders for a lot of very wealthy people who have the spare cash in a lot of portfolios. And so they're buying because as far as they're concerned, this is the dip. However, I believe there is a very fair possibility that we may yet have another dip. This is just too easy, too quick at the start of something, by the way, that historically has always caused market problems. It has never succeeded. It has never made money. Tariffs have only ever caused destruction, and especially the last time that they were imposed, not even to this degree, they contributed to a global depression. So I just am not able to commit to the idea, although technically I can see that bullishness, to commit to the idea that this is over and that the markets are just going to keep going. I think, if anything, we're seeing a bit of a knee-jerk reaction as well as possible tequila in the punch bowl. We could be in a little bit of a bubble. So just showing you this because I want to show you that these are bullish reactions coming off that. And technically, if I wasn't listening to the news, I would possibly consider this as a buying opportunity. Now, most of the time, I really look at that 50-period weekly moving average because I need us to get over that before I would be more convinced that we're back into a buying period. NASDAQ as well, also looking potentially bullish over there. Russell pushing up. This actually had a much bigger correction, broke these lows. So this one not looking as strong at all. The DAX being the strongest non-US one, absolutely insane. This one just recovering beautifully. This one to me looking much healthier. But even so, to have such a quick reaction is very, very unusual. Ladies and gentlemen, way more often we have 2-3 months down, 3-4 months recovery. This time around, what are the most uncertain periods? Without a doubt, the most uncertain period I've ever encountered. And the market has fallen and rebounded instantly within a week or two is just a little bit too quick for my comfort. Look, I'm seeing some really positive stuff here with Bitcoin. I think that's still looking relatively strong. I think that's got some potential to the upside. But when I run through the Mag 7, the Magnificent 7, for example, here, Apple looks weak to me. This price action behavior looks as though it's got further downside. I'm not seeing this turning around. I see this going further down, technically speaking, by the way. Microsoft, yes, gapping up, looking very bullish, but it's got to break up through this to really convince me that it's recovered. Then we've got Amazon. Amazon doesn't look strong here, guys. This to me looks like it's got further downside. Google, yes, it's a relatively nice rebound, but it did break the low, so this is not an uptrend. So what we are in now could be a range or a possible turning or a possible change.